I'm Dave Mecklenburg from Tiger Shark Trading. Today we're going to talk about two trading strategies, the breakout strategy and the momentum strategy. I have a watch list that I put on every day. It's free. I'll show you how to get on that list. Before we get into, I want to remind you just a high degree of risk in trading. Been trading for more than one day. You know that you can and will lose money trading. Only trade with money you can afford to lose. Just quickly about me, been doing this for 19 years. I started this website 17 years ago. It's probably on the verge of breaking or break in the next couple of years here as everything becomes outdated and unwieldy and has a lot more articles than it was ever intended to have. I think we're over 40,000 at this point. I'll put it in there by me. Everything I do is free. All my stuff is free. It's supported by ads. There's ads on the website, ads in the newsletter. So when you click those ads, you're paying for the site. I don't have any one-click ads, so don't feel like if you click something, you're going to get spammed. So everything is a okay ad. And if you hate the ad, the good news is it's going to pay for the website, or that advertiser paid for that click. Again, I can't tell you to click those ads and violate the terms here. I don't want you guys just clicking stuff and doing ad fraud, but I do want to let you know that I appreciate it when you click those ads and pay for the site, because that's what pays for everything here. And then last, I've got something for everybody. So I do a particular type of content, either day trading strategies, back-tested trade station stuff. But I've got guests who do options, Forex, futures, whatever you want. But I usually have at least five or six things of content every week. So context of this lesson, any guest of mine, as I do have guests, that number one, trading is hard. I understand all the marketing tells you how easy it is. If you just do these simple things, you'll make a lot of money. Of course, if that were true, everyone would trade and no one would farm or work in factories. It's hard. If you believe that trading's hard, you're gonna do a lot of things differently. The corollary to that is no one sells money printing machines. Again, I don't sell anything, but obviously I have ads that pay for everything. You're not going to magically trade profitably because you bought something. You're not going to magically make $100, $200, $500, $1,000 a day. That's not how trading works. There isn't a normal and equal distribution of money as you trade. I'm going to give you some tools. I got a whole strategy for you here today, or two strategies. I'm going to give you the tools. You got to put in the reps. It's the only way you're going to learn how to trade. Do something every day. Maybe flip charts every 15, for 15 minutes a day when you get home from work, so you can see how you implement these strategies. If that's working for you, then maybe you can simulate it. And once you've been able to simulate it successfully, then maybe you can use real money, but it's going to require repetitions. How do you get stronger? Do your reps at the gym. How do you get faster? Do your reps on the road. How do you learn how to trade? Do your reps. All right, so since I don't sell money printing machines because those things don't exist, I'm going to give you a strategy here. I'm not going to tell you you're going to make money, but what I will do for you is save you hundreds, perhaps even thousands of hours of you spinning your wheels. And the best thing I can probably do for the typical person who wants to trade is prevent you from blowing out your account, which most people actually do. So let's just get into these two strategies. These are 8 elements of what I think about when I think about a trading strategy. Number one, control or risk. Think about the downside for it. Think about the upside. Hey, stop's one way to do that, but there's other ways of controlling your risk. You could buy options. You could do a basket long and short. 2, control our costs. Again, commissions are going to be the obvious cost here, but I consider wide spreads and slips to be a cost. If you can't get a good fill and you had a small edge, well, that's going to be a problem for your strategy here. Simple is always better than complex. The higher the likelihood, the higher the complexity, the higher the likelihood of errors. But simple just seems to stand the test of time, gets outside the noise. 4, range, volatility, whatever we want to call it. Whatever we're trading needs to move. All right, your penny stocks that you think you're gonna get rich off that move for like 2 and 3 cents a day, that's not any range. You're looking for things that move every day, obviously major futures contracts, S&P 500 stocks, they move every day. And we're gonna use that universe of stocks as well in this strategy. Heard the trend is your friend. A lot of times you want to be on the side of overall trend. Sometimes you want to use a trend filter. We do use a trend filter in one of these strategies. We're just going to be above or below the 50-day moving average. That's a simple trend filter. 6, momentum. So we want that trend to be speeding up, and we also don't want to be catching falling knives. Right? That when we trade something, we want it going in our direction. Right? It should already, if we're going to go long, it should already be moving up as we take the trade. Right? We're not going to guess that the move down is over to go long. It should be going in our direction. Or if we're going to short it, it should already be going down. I'll make this a little bit more clear when we look at the strategies here. Confluence of leading indicators. Again, new traders, they like off-the-shelf indicators. Think it's a way to print money. We know that's not true, but these indicators kind of show you when to buy and sell theoretically. Problem is they're all lagging. Some people say, well, they're all indicators are lagging. They're all derivative price. So for me, a leading indicator prints across the price charts here. So when you're looking at RSI, you're waiting for RSI to hit 30 so you can go long. You don't know what price that's going to be. So we want to know the price of our entry and exit ahead of time. So things that print across the price charts are leading indicators that tell you your entry and exit ahead of time. What are some things that print across the price charts? Major moving averages, your 20, your 50 to 200, or whichever ones you want to use. Fibonacci retracements, extensions. We're going to use Fibonacci for one of these things. Trend lines, recent highs and lows. Floor trader pivots. Those are all leading indicators because they print across the price charts and give you your levels and tell you the prices or approximate prices of entries and exits. And then last, hey, your target's significantly larger than your stops. As an individual trader, you're going to be right about 50% of the time on most strategies. Yeah, there's some option selling strategies where you're going to be right 80 to 90% of the time, and you have to be because your losers are going to be significantly larger than your winners. But on a typical balanced strategy, long and short, same rules, only opposite. For the short, you're going to be right about 50% of the time. Maybe you got a slight edge, 52, 53% of the times. How do you make money? It's because your winners are bigger than your losers. You're going to cut your losers once you're outside of normal volatility, and you're going to ride your winners to even bigger wins. Easier said than done. We're wired to do the opposite of that. We're wired to hold on to our losers because it's not a loser until you close the position. So if I just hold on to this, comes back to break even, I can exit with a slight winner or at zero. But the problem is losers become even bigger losers. We're wired to lock in those gains early for fear of giving away our money, giving back that money to the market. But the problem is winners become even bigger winners. We're also wired to want to be correct. We're always looking for that 80, 90% winning system that don't exist because we like being right. So again, you have to wire yourself or practice or get in the reps to be to train yourself to accept being right half the time. All right, so this is what I consider a good day strategy. This is a day strategy. I'll show you how you can adjust it or play around with it if you want to do something else with it, but we're going to talk about 2-day strategies. It's the best way for you to get your reps in. If you're a new trader, just look at something every day, right? You can flip charts. You know what the entry and exit is. You're done. You're getting in your reps. All right, but I think 4 to 6 cents per share per trade is a pretty good edge. We're looking for an edge that we can exploit over and over and over and over again. That small edge that can be exploited. So hey, what does that mean, 4 to 6 cents? Well, in dollar figure, you're going to multiply your share size to get a dollar figure. If you're trading 1,000 shares on every trade, that would be 40 to 60 bucks per trade. All right, that's all winners and losers. So hey, your average winner was 30 cents, your average loser's 25 cents, and you took equal number of winners and losers, 50% each, that would average out to 5 cents. Winners and losers, multiply your share size. If it was 1,000 shares per trade, that's $50 per trade. All right, maybe you're taking 100 to 150 trades per month if you're day trading. And hey, if you're pulling 4 to 7 points out of the market, again, multiply your share size, get a dollar figure. 1,000 shares on every trade would be $4,000 to $7,000. 2,000 shares on every trade would be $8,000 to $14,000. So at some point, you gotta move up in size to make some money day trading like this. Hey, we're gonna have rules. Whatever those rules are, you gotta follow them. Right? You can back test stuff and you can automate your trading. That'll help you follow rules. But if you're not automating this, and this isn't an automated strategy, we're going to follow it like it's an automated strategy. The rules are the rules. I'll show you how to change the rules, test the rules, change them every month, or see if you want to change them. And then what I want you to remember about the rules is that the money management is usually the edge. It's not the setup. It's not even necessarily the trigger. It's how you manage your trade, how you manage the stop. What's your initial stop? What's your break-even stop? What's your trailing stop? That's usually how you can pull more money out on your trades. All right. And so even if I'm not doing a back-tested system, and I do those in TradeStation, mostly on the E-minis, but I use their principles, things I've back-tested, things I know about the market, things I know how things move, and we're just gonna use those principles, those very simple principles to create simple strategies. All right, so hey, if you're new, I usually show this stock. I ask, hey, what do you see in this this picture? It's just a random stock, S&P 500 stock over a random period of time. It just happens to be Exxon, but this might even be a few years old at this point as well, but they all look like this. And what I want you to notice, like people will say, oh, it's trending down or something like that. I don't care about that. What I want you to notice is how these big trending days happen all the time. See these big bodies? It picked a direction and went in that direction that day. So there's a bunch of these. I picked a particular ones too, where I say I ignored this one and ignored this one, where there's a big body. Is that what I want is a small candlestick in the direction of the trade. So if we were to blow this up, say on 5 minute, it picked a direction and it went in that direction during the day. On the short side, if you got a red bar with a small wick, hey, went in that direction. And so this one's got a big wick on the other side of the trade. So look, it picked its direction and maybe it came back, but that's still a winner. All right. So the thing is, if you're gonna be right about 50% of the time, hey, it looks like it's going down, I'm gonna short it. Oops, turned around. I got stopped out for a little bit. All right, looks like it's going up. I'll get in. So I get stopped out for a little bit, or I ride it for the whole day for a big winner. All right, I just want to show you it happens all the time that big trending days where stock picked a direction and stayed in that direction for most of the day happens all the time. And that's the point here. This is how you can come up with a strategy. All right, so these stocks, big body with small wicks, picked a direction, went in that direction. All right, let's look at breakouts. Hey, so here's the breakout strategy. I'm looking for a narrow range bar, very simple setup. Narrow range bar, that's the high to low past few days, most narrow range past few days. We're gonna use a trend filter above or below the 50-day moving average. We're going to trade in the direction of that trend. Meaning if we're above the 50-day moving average, we're only going to go long. If we're below the 50-day average, we're only going to go short. All right, so here's our narrow range day. We're above the 50. 50 is yellow on my charts. So the next day, if it breaks the high of that narrow range day, we go long. Pretty simple stuff. Right here, we blow it up on the 5 minutes. Next day, boom, triggers off the open. Try to hold as long as possible into the close. All right. That big wins are a function of time, so hold as long as possible. If this is a day strategy, try to hold shortly before the close. All right. Again, same thing, narrow range day. Hey, this is a red bar. It's a down day. I don't care about that. We're above the 50, so I'm only going to go long. All right, we blow this up, 5-minute bar. Yeah, it was kind of a weak close the day before, but it still popped up, triggered our trade, hold to the end of the day. Short side, hey, it closed below the 50. I know we're hanging around the 50 here. It's the 50 here, but it's below, so I'm only going to short it. Right, next day, takes a little bit longer, but eventually hits our trigger. We short it, hold towards the end of the day. So very simple concepts here, right? Here's again, narrow range day. It's an up bar, but we're below the 50, so I'm only going to short it. And sure enough, the next day takes a while and eventually triggers. I'm going to talk about trade deadlines a little bit later, but this one would have triggered and then hold it towards the close. So on this strategy, again, we're doing a break the previous day's high for a long or the previous day's low for a short. Hey, what does a break mean? 1 cent, 5 cents, 10 cents? Well, the good answer is it all works. And if you want to trade more, do a smaller number. If you want to trade less, do a bigger number. All right. So you're going to avoid some of those getting tagged in and turned around, but of course you're giving up, you know, a certain amount of money with the bigger number. So 1 cent versus 10 cents. All right, you're giving up 9 cents on all those winners. But hey, pick a number. I'm just going to say, hey, we can do 10 cents. 10 cents beyond the previous day's high or beyond the previous day's low. We want, we're going to throw away a break of the opposite condition, meaning we were only going short on this, it was below the 50. But if it broke, this one almost did it. If it broke the high of the day, when it breaks the low, we trigger a trade, breaks the high, we throw it away. I should have actually gone over that. Again, break the high, throw it away. In this case, if it broke the low, we throw it away. All right. So we're going to throw away. If it does the opposite of what we want, we just throw away the stock. There's no trade on it. I don't care if it comes back and breaks the high after it breaks the low. We're done with it. All right. Initial stops 20 to 40 cents. Again, good news. It all works. I find newer traders want the lower number, but generally giving it more room helps. So let's just say we do 20 cents, and then you want a break-even stop. It moved in your favor, X amount. Again, newer traders generally want the smaller number. Let's just say you want 20 cents. You might even want to do a trail. And how do you manage that while you do it, while you're in the trade and target end of the day? So pick a number. I'm not going to give you your number. I want you to pick a number and track it. When you can develop your own rules, you'll be a better trader. Again, it's all going to work, and then you want to find out what's going to work best. How are you going to find out what works best? So I put out a list. It's going to be 12, maximum of 12 longs, maximum of 12 shorts, from maximum of 24 stocks to watch, S&P 500 stocks between 20 and 100 bucks. And hey, again, most trades won't trigger. All right, so you pick your numbers. What's your entry? What's your stops? And then keep it in a spreadsheet like this. every day, put it in a spreadsheet. Then if you're really smart here, you're going to pick one of these things to test a rule every month. So we're going to test 2 cents instead of 10 cents. Do we get a better result or not? Have a separate spreadsheet. Only test one thing each month. You'll have enough trades to know, hey, what do you want to do? Do you want to go with a different number next month or not? And the next month, test something up. Let's see what happens when you do 40 cents. All right, the next month after that, let's see what happens when you do 30 cents. All right, test your own things, put it in a spreadsheet, keep separate spreadsheets, and then at the end of the month, you'll know what's up. Hey, I tracked this stuff with very simple rules for a whole year. It's 2018, and I was able to pull 4.6 cents. Like I say, you're looking for 4 to 6 cents edge. I got 4.6 cents, 4.6 cents. Doing simple rules. Probably if I kept working on this, maybe I could figure out a way to squeeze an extra cent out of there. Then the closer you are to 6 cents, obviously the better that strategy is going to be. But you should do spreadsheets like this too. Again, just do it when you get home. Flip a chart, follow your rules, see what happens. Test a different rule every month. After a couple months, you got your reps, you know your rules backwards and forwards, and you develop your own rules. It's going to make you a better trader, more interested in your strategy when you used your own rules. All right, there's breakouts. Any quick questions on something like this? I'm going to show a different strategy using very similar like rules, some adjustments. All right, I think we're okay here. All right, so for momentum trading, I'm using a bull or bear bar. So bull bar, daily bar closes near its high for a long side setup. Bear bar closes near its low for a short side setup. And then we're going to trade in the direction of that momentum, long and short. The whole point is like there should be follow through the next day on this setup, right? So here's a up bar closed near its high. Right, that's a daily bar. We blow this up on 5 minutes. You can see how it kind of trended. Now, really, I only care that it closed near its high. I don't actually care that it opened near its low, but most of these bars will be like that. It opened near its low, but all I care about is really a strong close. I don't care about the open here. But so again, when it breaks the high the next day, that's going to trigger the trade. Same like we did with this breakout here, right? Same thing going on. My throwaway is a little bit different, and we'll get to that. Again, close near its high. Here's the high. Here's the close. Again, kind of your trending day, closed off its high. The next day, if it breaks the high, triggers the trade. Same thing as, again, breakouts. Short side, this is your bear bar. Again, we closed near its low. Again, when it breaks the low the next day, triggers the trade. All right, there you go. Breaks that low, triggers the trade. 5 minute bars. Here's one, like again, it wasn't like a strong open to close. So we got this big wick. I don't care. All I care about is it was a weak close. I should have said a weak open. Don't care that we got a wick here. All I care is it's a weak close so we can get that momentum follow through, right? Kind of got a fake out. Doesn't matter. We weren't trading this. And turns around, weak close. Again, breaks the low, triggers the trade. So on this one, I'm going to use my leading indicator on this is Fibonacci lines. So I have a retracement line, the 38.2 retracement line, I'm going to throw away. And so instead of coming back to the opposite condition in the breakout, when we went long, if it hit the low of the previous day, we threw it away. And, you know, vice versa for the short, right? In this case, since I got a wider range bar, I don't want to necessarily hit the low of the previous day to throw away. If it just comes back to this retracement line, I'm going to throw it away. It'll be more obvious when I throw up the graphic. And then we're going to target these extensions, the 61.8 extension and the 100% extension for our targets. Again, I still kind of want end of day for the longest possible period in the trade if I can stay in it. I've tested these things of, you would think I'm overcomplicating it by doing these Fibonacci extensions, but I tried it doing it just simple, try to hold end of the day, and I just actually had better results with this Fibonacci. I think it had to do with just simply the targets are big, and that I didn't have a trail of any sort going for these big targets, and it just left you in the trade. So hey, this is I use TradeStation. So just so you know, so when you do these, you can actually set up these Fibonacci retracements and extensions just in the retracement tool. If you put a negative number in 61.8, negative 100, it'll give you an extension. So you just kind of do the range of the previous day, low to high, and it'll draw your lines for you. All right, so as I said, if it breaks the high, that triggers the trade. If it comes back to this 38.2 line, we throw it away. Whatever happens first the next day, either we're going to throw it away or it's going to trigger. It's actually possible it could go sideways and not do anything. But again, if it breaks the high, and then these are our targets. So either throw it away or trigger that trade. Short side, same thing going on. We draw our line high to low, right? If it breaks the low, triggers the trade. If it comes back to the retracement line, we throw it away. Then here are our targets. I can show you how simple this is to draw in TradeStation as well when we're wrapping up. And then if I put this all on one, the setup day and then the trigger day, all in one chart, you can see I can draw my lines, low to high. Again, we break the high, trigger a trade. I use 10 cents here as my trigger, 10 cents beyond the high of the day to trigger it. Hey, maybe I got in, maybe I didn't. I usually won't trade the first 5 minutes, so this may have triggered, may have not. But if it did, maybe it stopped me out. Let's say it triggered us. We got in on the second bar, gave us a chance to get in on the second bar. Don't trade the first 5 minutes. Stopped us out. 40-cent stop out, knocked us out, but it never came back to this Fibonacci line. So I'm still good here. Never came back. Stopped me out on the first trade. Now I can enter on the second trade. Triggers us in, hit target 1, hit target 2. Again, pretty simple concepts here. Again, simple is always better. And hopefully the Fibonacci is not complicating it for you. It's still a very simple idea. So again, same thing going on here with the same rules. Again, entry, break the previous day's high for a long, break the low for a short. Again, we're going to toss it if it hits that Fibonacci line, right? In breakouts, we toss it if it hit the opposite condition, basically hit the low for a long, previous day's low for a long, or previous day's high for a short. Here, we're going to toss it on a much more narrow thing, but keep in mind we have much wider range bars here for a narrow range bar versus a bull or bear bar. Again, same stops work. This stuff all kind of works here. So again, we can test all this stuff here. You want 10 cents beyond the previous day's high, or you want to test 2 cents beyond the previous day's high, whatever you want to test. If you want to do 20 cents here for the stop, a break-even stop, you can say 20 cents. Again, we're targeting end of the day or those fib extensions. Same S&P 500 liquid stocks. And again, most trades won't trigger. All right, same thing as with breakouts. If you want to do breakouts, you want to do momentum, you want to do them both, but flip your charts, keep your spreadsheet with your rules you picked. If you want to test a rule every month, keep a second spreadsheet and test that rule. See what happens, what performs better. Again, with very simple rules, I did 4.3 cents for the year, slightly worse than the breakouts. But again, I think you can probably squeeze more out of this if I spent a lot of time on this, playing with this or not, whether or not I could get closer to 6 cents. I don't know. But again, basically the same rules going on here. Different strategies, similar rules. And then let me 1200. Also, I had a lot more trades here on these breakouts using those breakout rules. About 1600 over the year versus 12 something on momentum. Just over 1200. So again, play around with it. I showed you, like, look, if you want to trade more or less, you can kind of adapt these rules to trade more or less. What's your trigger and how far out is it? And maybe you got time limits. Again, I don't trade the first 5 minutes because the spreads are too wide, but maybe you don't want to trade the first 15 minutes, or maybe you just want to trade the first hour because you go to work. You'll never be able to trade that, or just entries only the first 2 hours. That will actually give you more or less trades. All right, some special rules too I want to go over as we kind of wrap this up. Any questions on that momentum too? But here's some special rules. So I put out the list every day. You might see a stock that's long one and short the other. And then I always get like a dumb question, hey, you're long and short on this. All right, even though I always go over this in the video. So it's entirely possible, hey, look, it's a narrow range day below the 50, so that's a short, but it was still a bull bar, so that's a long. So it's entirely possible for them to meet opposite conditions on those lists, but they can't both trigger, right? In fact, if one were the trigger, then you're throwing the other one out, right? Because it does the opposite condition, or breaks the high or low, or case of the Fibonacci line. So they can't both trigger. They could be on the opposite list, but they're not both going to trigger. Hey, wide spreads, again, if you can't get a good fill, if our edge is only 4 to 6 cents here and you can't get a good fill because the spread's still 4 cents, you probably don't want to take that trade, or you got to really work that trade to make sure you get filled. All right, so since there's enough trades on something like this, I would just walk away or wait for there to be a tighter spread. So again, you can't give away your edge on slips. Time limits, I mentioned, look, I don't trade the first 5 minutes. Some of you might want to not trade the first 15 minutes. I do think a lot of these things move early though. So as soon as the spread comes in, you have a tight 1 or 2 cent spread, then you should kind of be ready to trade, because you should actually get, things that trigger off the open, especially momentum. All right, but in terms of time limits, is I don't take new entries with less than 2 hours to go. So, and I'll show you that on a chart. Why is that? Well, again, our big winners, we need to have winners bigger than our losers, and to have big winners, you need as much time as possible. And I find that less than 2 hours, your chance of having that big winner is getting unlikely. And then gaps, I usually get good questions about gaps. So I'm going to show you examples of how to trade gaps. Again, you should really always be going in the direction of the trade, right? That's the momentum to trigger, right? We don't want to put a limit order, let it come to us. We could be catching a falling knife. So here's something that gapped. Again, I don't trade the first 5 minutes, so we want it to come back to the entry line, right? In this case, right, if we put our limit order in, right, now we're really in the hole here. So what I wanted to do is go through and then come back down, right? Here it finally does come back down here, but here's my 2 hour end of day limit. It didn't trigger before I had a chance. Again, I cut it off with 2 hours to go because I don't feel like I have a big winner. Here's one where, hey, you put your limit order, you would have won, right? It comes back to the line, right? And this line is, I think, 10 cents below the low. So this would be the entry line, right? That one would have worked out, but more likely you get these where, again, you catch the falling knife, right? Enter your trade, and then it goes against you. So the better way to do a gap is look for a reversal. What I like to do, these are 5 minute bars. If I have 2 closes above the line, 2 closes, right? So that's 1, 2. This is our trigger, 3. 1, 2, and then we can take the trade. If you want to be even safer, you could do more, or a certain time limit. I use 5 minutes here, but if you want to do 3 minute charts, wait 3 bars, 4 bars, But basically, I want multiple bars to close and then trigger the trade. That's how I would do a gap. Gap down, I want it to come up through the line and then turn around on a different bar. Here's one gapped up, and then it hit our Fibonacci line before it triggered. Throw it away. Here's one. Kind of a weird wide range bar here. This was the breakout bar, so it's below the low of the day before it triggered. So it hit the low first before the trigger, throw it away. Here's one, hit our Fibonacci retracement line first before triggering, even though this would have been a good trade, but it hit it first, throw it away. Here's one that kind of that initial example here might have triggered us on the second bar, maybe stopped us out if we're using a 40-cent stop here, then got us back in because it never hit that fib line for a big winner. Here's one. So it didn't gap, but it closed above our entry line on the first bar, so it doesn't give us a chance to enter the trade, waiting for the spread to come in. Comes back down below the line, probably triggers here, never stops us out, goes 40 cents in our favor, so we're at break even, and then it knocks us out for zero at a break even trade. All right, those are just some examples. Again, you should play around with these rules yourself. So again, I'm looking for, if I'm day trading, if you're getting in your reps, again, this might not be a match for a lot of you guys, but it's a good way to learn how to trade, especially doing the day trades. You're gonna get your reps in quicker, 4 to 6 cents per share, per trade. All right, again, multiply your share size to get a dollar number. If you're day trading, you're probably looking at 100, 150 trades per month. I showed you how you can make the adjustments of how often you want to trade. You can kind of change rules and then test those rules. Definitely time limits will help you trade more or less. Again, if you can regularly pull 4 to 7 points out of the market, again, you won't do that every month. That's not how trading works. But if you average that over a year, over multiple years, you'll be doing pretty well for yourself. Again, rules are the rules. I showed you how to adjust the rules, how to track different rules. And then, hey, those money management rules are really how you're gonna squeeze more out of this too, especially like the trailing stop. I didn't really talk too much about a trailing stop, but think about trailing stops on this, not just an initial stop and the break-even stop, but also the trailing stop and how to stay in that trade for the big winners. So, things I want you to take away from this. I'm going to show you how, if you want to join the list on this, again, repetition is going to be the key to learning how to trade. If you guys are lazy, you don't want to do the reps, and that's a lot of people who are interested in trading, by the way. You just want, someone to give you some picks, and then you can lose all your money with their tips. But get in your reps. Really learn the strategy, know it backwards and forwards with your reps. Then also look at the chart, see what happens. You'll get more comfortable taking trades, knowing that weird things can happen or unexpected things can happen. But as long as you follow your rules, you'll keep squeezing out these small edges, right? You're looking for a small edge that can be exploited over and over and over and over again. And that, hey, testing your own rules is part of trading. So again, I encourage you to pick your own rules, pick your own initial stop, pick your own trigger. And that you're going to be more comfortable with a strategy where you essentially created the rules, or those are your rules that you know backwards and forwards, and then you tested them, and then you have confidence in them. And then you're going to have a process for maintaining your edge. Hey, test those rules from time to time. Every month, test something, see if something performs better. It's going to help you maintain your edge. And then I also showed you how, hey, look, we got two different strategies, but they're kind of using pretty similar rules. It's a little different, but it's mostly the same. And that you can come up with your own strategies, whatever way you want to trade, whatever setup, whatever simple setup you want to try, and you can try these same rules on that. Look, most strategies aren't going to work for you. If you're new to trading, usually that first strategy is not going to work for you. but it's always going to get you one step closer to finding something that does work for you. All right, and then I want to show you TradeStation. So this is the list that already went out. Oh, actually, so on the website, Tiger Shark Trading here you can join the list here, learn to trade, join the daily watch list. I'll give you the link with the video, but if you just join that list, you'll get the daily watch list. It already went out today, just so you know. This was the list, and you can see, look, these are our bull bars. I'm sorry. These are my narrow range bars. I was like, yeah, that's not a bull bar. All right, these were narrow range bars, long and short. We're above the 50, and then the short were below the 50, below the yellow line on my charts. And then our bull bars, you can see these kind of big bars, strong closing bars. I don't care where the 50 is on this, doesn't make any difference. I don't use a trend filter on the momentum, and then the short side ones, momentum to the downside, right? If you're in TradeStation, like I said, you can, if you draw your line, the low to high, I already got it set up in the default here, saved, where it draws my line. There we go, ready for the next day now, right? Breaks that line. And you know where you throw it away, where your targets are. I already have it set in my stuff. And you can just eyeball this stuff. Short side, same thing, only we go high to low. Click, click, and our lines are ready to go for the next day. All right, so I think we're set on this. Any other questions, this strategy, any other stuff? Again, I want to thank you guys for supporting the site. Again, when you click any of these ads in the newsletter, on the website, pays for everything. The more you support the sites, the more content I can produce for you guys. Again, I got guests, got something for everybody 5 or 6 times a week. All right, so there were some issues with the mic off the top. Hopefully, recording isn't messed up here, but I'll get you guys a recording bottom of the next hour. So look for the recording, all the rules. And again, if you want to join the newsletter, it's there. Again, it's a good way to learn how to trade, just getting in your reps, 15 minutes a day. Make it a habit.